It's a chilly morning in January 2026. You grab your phone, open your banking app, and boom, your Social Security deposit is way higher than usual. But here's the thing, it's not a mistake. For millions of Americans, this bigger check is about to become a reality. Many are calling it one of the most significant Social Security boosts in recent years. But there's a twist, not everyone will actually see this increase hit their account. And the reasons why might shock you. In the next few minutes, I'm going to break down exactly who qualifies, who might get less than expected, and what you must do right now to avoid losing out. Even waiting a couple of weeks could cost you thousands over time. But before we jump in, take a second to subscribe to Financial Future and hit that notification bell. This channel is here to help you navigate Social Security, Medicare, retirement planning, and all the financial secrets most people never hear about. Alright, let's get into it. The Social Security Administration has officially announced the 2026 Cost of Living Adjustment, better known as the COLA, and it's turning heads nationwide. Now, 3.4% may not sound huge on paper, but in reality, this means hundreds of dollars more every month for many retirees. Here's an example. If you're currently collecting around $2,045 per month, a 3.4% bump adds about $69.53 each month, over $834 more per year. But here's where things get interesting and complicated. Not everyone gets the same increase. Most news headlines make it sound simple. Everyone is getting a 3.4% raise. But that's not how Social Security works. Your actual increase depends on multiple factors like your type of Social Security benefit, your Medicare Part B premiums, your work history, whether you face WEP or GPO rules, when you started collecting benefits, your income level for IRMA, and even how the SSA phases your payments. That's why two people receiving the same benefit today may see completely different increases in January. Why the 3.4% number matters. This percentage wasn't pulled out of thin air. It was calculated using the Consumer Price Index for urban wage earners and clerical workers, CPIW. But what's unusual this year is how the increase interacts with Medicare Part B premiums. In many past years, Medicare premium hikes ate up a big chunk of COLA increases. But 2026 is shaping up differently, and the impact varies depending on your situation. So let's break down who gets what. 1. Traditional retirement beneficiaries. If you're receiving standard Social Security retirement benefits, the 3.4% applies to your base benefit. But if you receive spousal benefits, survivor benefits, disability benefits, or your benefit is affected by WP or GPO, your increase may be calculated differently. Here's a real example. Sarah, a retired teacher, receives Social Security and a teacher's pension. Because of the windfall elimination provision, WP, her increase may differ from someone who receives only Social Security. This is why understanding your specific situation is critical. If you filed early at age 62, your increase is based on a reduced benefit. If you waited until full retirement age or age 70, your increase is based on that higher amount. This means two people with identical work histories can see very different increases. Yes, some beneficiaries might actually receive bigger boosts. This happens because of specific Social Security rules connected to certain earned income adjustments, recalculated benefits, delayed retirement credits. It's uncommon, but it's real. The SSA is rolling out the increase in phases. When your new payment arrives depends on your birthday, your benefit category, and whether you receive SSI, SSDI, or retirement benefits. Missing certain deadlines or failing to update income or personal info could delay your increase. Medicare, the big wild card for 2026. Now let's talk Medicare because this is where things get really interesting. Medicare Part B premiums. These premiums are also changing in 2026. Depending on your income, the increase could take a small chunk of your COLA, take a big chunk, or not affect you at all if you're protected by the hold harmless rule. IRMA income thresholds are changing. If your income passes certain levels, you'll pay extra Medicare premiums. This can easily reduce or even erase part of your Social Security increase. Knowing your income bracket ahead of time is key. What if you have other retirement income? If you're collecting a pension, 401k withdrawals, IRA distributions, investment income, your tax bracket could change in 2026 because of the COLA increase. This means some of your Social Security could become taxable. Planning ahead, especially before the end of 2025, can save you money. A real example: John and Mary. Let's say John receives $2,500 monthly and Mary receives $1,800. A 3.4% increase gives them John plus $85 per month, Mary plus $61 per month. Combined, plus $146 per month, or $1,752 per year. But depending on their Medicare premiums and income, their actual net increase could be much smaller. New SSA digital tools in 2026. The Social Security Administration is introducing new online tools to help manage benefits. These tools will give more accurate COLA breakdowns, track Medicare impacts, help estimate IRMA charges, make reporting income changes faster. Knowing how to use these tools can help you avoid delays. Taxes, the hidden surprise. The 3.4% COLA could push some beneficiaries into a higher tax bracket. That means some people who never paid taxes on Social Security before may start doing so in 2026. There are strategies to reduce this, like adjusting retirement income, planning RMDs properly, spreading withdrawals over tax years. But you need to plan early. What this means for future COLAs. This 2026 increase gives us clues about how future COLAs might be calculated. With inflation still uncertain, Social Security might use similar approaches in upcoming years. Special cases. The increase may work differently for disability beneficiaries, survivors, SSI recipients, people affected by the Government Pension Offset (GPO). Each of these categories has its own rules. Final thoughts. The 3.4% COLA for 2026 is significant, but the amount you actually receive depends on Medicare, taxes, your benefit type, your income, your filing age, and SSA rules that many people don't know. Now I want to hear from you. How will this increase impact your retirement planning? Do you feel 3.4% is enough, or should Social Security increase it even more? Drop your thoughts in the comments below. Your story might help others watching. If you found this helpful, don't forget to like the video, subscribe to Financial Future, hit the notification bell. We have an upcoming video on how to maximize your Social Security benefits under the new 2026 rules, so make sure you don't miss it. Thanks for watching Financial Future, and I'll see you in the next video.